we are looking at major economic devastation here. Airbnb laying off 25%, Uber laying off 14% and more to come, Lyft laying off 17%. Just how many more layoffs will we see? And just how hard do you think this is going to hit the tech economy when all is through?
You know, I think what's really interesting is when you double click into some of those businesses and others, I think people are thoughtfully taking advantage of this situation. Maybe that's emotionally difficult to hear given the pandemic, but I'm sure everybody watching this network is aware that businesses are navigating through their business needs. And I think that you still may see more to come as people try to really right-size their business. As you know, Emily, growing up, being in the ecosystem I was in that Web 2.0 and watching all these companies grow, a lot of them had their economics a little bit upside down and needed to be more profitable than they actually were. And I think they're taking advantage of this moment. Some need to do it to stay alive. Others, I think, are actually just setting themselves up for a brighter future.
Right. So I wonder, are VC-backed companies more vulnerable because they take on all this funding to invest in the long term and run on such slim margins or even losses, and then something like this happens and, all of these employees have to go?
Yes.
So let's talk about retail, because you obviously have
yeah.
You have your commerce business. You launched VaynerCommerce, and retail has been really hard hit. Of course, a lot of shopping has moved online, but I wonder and assume that there's less shopping in general because you've got 33.5 million Americans out of work in just the last 7 weeks. How are you advising your companies, and what trends are you seeing when you zero in?
It's a game of haves and have-nots. Food, beverages, alcohol. There's a lot of sectors thriving as the consumer behavior has shifted in-home, and restaurants on-premise have been affected, obviously completely 75 to 100% percentage declines. And then there's obviously things like clothes and other accessories for your car, things of that nature that have been hit hard. So the navigation's been pretty scattered. Obviously, there's a ton of our clients that are quadrupling down. You have an overlay of ads on Facebook and Instagram and TikTok going down because of this. And so there's a huge opportunity. I wish people were spending less on e-commerce, but I'm sure you've touched on this subject. It was devastating for me to see how much uptick there was in e-commerce and DTC activity as soon as the stimulus checks hit. This is a capitalistic, materialistic society. And some of the people that needed that $1,200 the most literally spent it on a hoodie and a bottle of champagne the second they got it. And so, I don't know, it's going to be interesting, the long tail, but right now we're in a big world of haves and have-nots.
Now, your company, VaynerMedia, is a modern-day media and communications holding company, and if anybody was built for the quarantine era, it is you, because you have been so far ahead in some of these ways to communicate digitally. What trends are you seeing that you believe might be accelerated in media and communication as a result of the quarantine and the shelter in place and this extended work from home, which you've got Google and Facebook telling employees they're working from home till the end of the year?
It's a great question. There's a lot of things. First, to your point, and we're grateful for this, some of the biggest Fortune 500 CPG and other brand-oriented brands are really taking a second look or tripling down with us, because now people have to worry about where their dollar has been spent. And there is an ungodly amount of money being wasted on programmatic digital banner ads and pre-roll ads, and even a scarier amount of money being spent on network television commercials. And so I think what you're seeing is people have the time to get educated. I've been on the phone with so many of the CMOs of the companies that are scrolling through your network all day long with stock prices, and they're rethinking their media spends. They're starting to understand some of the things that we've been trying to say, because they have actually the time right now, believe it or not, to double click and get into the details of some of these things. So I think the long-term effect is, I think with the growth of OTT, as a parallel other trend on top of the acceleration of people becoming more comfortable with digital, I think you're going to see the acceleration of the decline of upfront media buys in network television and bad digital executions.